Never fails. I mean, we're seeing a constant trend here. If anytime we have a good day, gives it right on back. Just no. I don't even know what the word is I'm looking for. Keeps failing every time. No strength. There we go. Excuse me. Sorry about that. All right. So let's go through this list. It's decent size, but again, I have to have a little bit larger list because we get these very quick drops and it can change half the stuff I find. So I do see we ran back up the VWAP. We'll see if we hold. S&P is already down 2%. Nasdaq already down over 3%. Yeah, pretty crazy. So let's see what's out there, shall we? All right. Oh, I'm here. This. Okay. All right. So let's take a look. First one that looks pretty good here is going to be, where are you? DVN, right? Devon Energy. I like the pullback here back to this 8 EMA. Typically it rides the 8 pretty well, pulls back to the 21 or 50 and typically bounces. So using this as a bounce off the 8 EMA, and I want to sell a naked put down here at the 53 strike, which is support. So you got a lot of wiggle room to the downside here. And then if you have to, must define this one, it's going to be roughly the 64s here, which is going to be just shy the 50-day, but you at least have the 21 as support. Okay, and I just want to see it bounce off and retest those highs. So on DVN, SPY broke VWAP. So this will be June 24th, the weekly. There's not a lot of liquidity in a lot of these, but I just don't want to go so far out if I don't have to. So I'd like to see a little bit of a try to get him here and not change the structure. So like I said, the first one, the 53s, you can see that there's no volume there. Spreads are a little wide, but this will be something like I'm comfortable with, say 60 cents. So I'll drop it below the mid price with 2 contracts, see if I get the fill. It's a grand for about $120 and over, over a 90 pop on this one. You're almost $10 past the expected move. Then the defined one here is going to be the 64 puts right at the 30 delta and go into the 59s. You see there's no volume there, a little bit here. This would be something I'd hit at $1.30 and just see if I got filled. They are about 20 cents wide. One contract's less than $400 at risk, and it actually gives you a good pop, 68%. All right. EWZ. Okay, this one's been pushing up, had a little bit of a pullback, and we're running back up again. I want to see this break out and keep going towards these highs. Got some upward momentum. We are holding the 200-day. The 821 has crossed over, and it's holding the 50-day right now. You can see the moving averages are curving to the upside. So I like this to the upside. Looking at a 27 put down here right near support, so it does give you a lot of run room. And then, the defined version is going to be the 32 put spread, which will be at least below the 200-day. Not quite the support level of 30, but close enough. Nice little bounce here. All right, so on EWZ, this will be July because it's already not the most liquid ETF as it is. But so going out to July, there's those 27s. If you can get 34 cents or better, then it's let me see. There you go. 34 cents or better, you're gonna get over $100 for $800. So it's not too bad. Mid price right now is 35 cents. Spreads are fairly tight. There's just not a lot of volume, but a lot of open interest. So it's gonna give you over 93 pop. Like I said, just over $800. Not bad at all on that one. Okay, the defined risk one. What did I say? 32.30. Okay, that's right at 66. So you actually get 1/3 the width. You can maybe even go. Actually, I might change that. Yeah, we'll go 3 wide. 32.29. So you get a little bit more. It's 1/3 the width there at 90 plus cents, almost 33.60. And it's just shy, but I don't mind that. So that one, 68 pop. You got 3 wide. You're less than $500 of at risk here. Okay. All right. Next one. Now this one, some of us are in it. It's Halliburton, right? But those that aren't in this for an earnings play, I like the chart. It's a good bullish chart, made an all-time high, it pulled back and consolidating, and now it's in an area that I feel like we got a squeeze coming. It's going to break out of this resistance and retest those highs. So I'm looking at a 28 short put right at that 200-day, actually slightly below it. You got a lot of wiggle room. And then the put spread would be the 34s, which is currently short put that I think we have right now, which is going to be right at support here. So still decent amount of wiggle room. I want to see this medium squeeze fire long. It mainly does. 13 out of the 18 have fired long in the last 2 years. So like this one bullish. Okay. So when you come over here, Halliburton, this will be July. All right. Going out to, what did I say? The 28 puts, a little bit of volume, tight spreads, only 2 cents wide. You know, again, 34 cents or better, but the bid is 35. So even with 35 cents at 3 contracts, it's 850 bucks for $105. And again, over a 90 pop. Really good play on this one. Nicely past that expected move. And then you come up here at 34s. And go to the 31s with like 2 contracts. It's not the best credit, right? That should be like 90 cents. But if you have to define it, that might work too. Maybe a little bit higher though. A little bit higher. Let me see what 5 is at. A little bit higher, but it's a 30 delta. Pop changes. I'm gonna stick with the 34. So 65 cents or so. Okay. 2 contracts is going to give you 130 bucks for less than $500 at risk in a 69 pop. So still really good odds here on this one. All right. Next one, CLF to the downside. So this one actually ran up really good, right? Nice bullish chart for the longest time. And everything happened, rejected the all-time highs, and it's just dropped. Coming down, it's now below the 200-day. We are seeing a little bit of curving on the moving averages, so I'd probably put an alert like at the 21 moving day, somewhere around 24, just to watch it, but it has been consolidating here. I want to see it reject like it did yesterday, the 200-day, and come back and test these lows of 20. So the short call would be up here at the 30, so you do got a lot of run room and a lot of resistance levels here. 200-day, you got gap fill, you got the 21, the 50, 27 and some change, you got 28s. There's a lot of run room and a lot of resistance to the upside. And then the defined one would be the 25 call spread right before the 50-day moving average, which is why I'd put an alert somewhere here if it does break. But it also has a lot of time. So looking at this one in July, I believe, yeah, July. So July 30 calls, 30 cents, 4 contracts, you get 50 short deltas, whole lot of short delta, 90 pop, and it's less than 900 bucks to put on. And then call spread at the 25, 28s with 2 contracts, gonna give you about 120 bucks, less than $500 of risk, and a 75 pop, and still give you like 32 short deltas. All in all, it's not too bad. Now, if you can get the 26, 29s, 50 cents, I'd prefer that one because that puts you right at expected move. But just because of the credit, you may have to come up here and go that route, which is still fine with a reasonable pop. Next one's Valero. This one's only undefined. I don't like the spread side of things, but Valero, much like a lot of the other energy and oil stocks, have just been running up. It did pull back after hitting those highs. It's kind of consolidating right now in the 120 to 130 range. Got a squeeze building up. So I would like to see this one bounce off this 21 day where it's done here, kind of done here, and retest these highs. So a 95 put right at support, multiple levels to cover there. Okay, Valero, July, 95, 30 cents wide. It's not the most liquid. Okay, $120, $1.20 or better. Really here gives you still 91 pops, so really good odds and less than $1,000 of buying power. Now that defined risk one, right? You're stuck with a 25 or a 33 delta. So I don't really like the idea of going to a 33 delta, that pop drops down to only 62%, and those 115s, they do put you below the 21 day in a level of support, but I just don't like the pop on that one. Okay, so I'd personally just probably stick with 95 put. Okay. 6A Aussie dollar. Looking at this one to the downside, we did see some upward momentum coming in, but I want to try and see. I'd put an alert here. I want to see this continue to push down a little bit. Ideally, I want to see it reject the 50 day if it continues pushing up, or break this 21 for a pullback down. Okay, so looking at selling the 75 calls up there, multiple levels again of resistance all the way up, but I would be looking for like probably the break of the 21 is preferred here. There earlier and it's moved back up, so I want to see it get back down, because then it's got that run room back down. On 6A, July 8th, which is 45 days, 75s, 75 cents, 150 bucks. Okay, gives you an 88% probability. Not bad. It's only $930 to put on. Your 2 cents past expected move, which is good. And then the defined one, 74, 75 and a half calls, and that one right around 14, 15 cents. Same credit with an 82 pop, and you're still past the expected move. This time you're defined at no more than 1300, and buying power is only 350. I realize I have another EOG. EOG with a short put. Also been running up. We got a medium squeeze building up. I want to see this hold the 8 EMA. It is a little choppy. You can see that it does bounce between the two, but for the most part, it's just riding these moving averages all the way up. So we got a little bit of consolidation while building this squeeze. I want to see it hold and retrace, break out of this resistance, and run back up towards those highs. Okay, so I would be looking at a naked 100 put below support, okay, almost at that 200 day, or the 115 put spread below the 50 day, which is still going to be reasonable distance away. This is one you could also do a covered call on if you have a higher account and collect the dividends that are going to be coming up soon if you want to hold it that long. So on EOG, if I were to do a covered call, volume's not the greatest here. Probably have to stick it in July with a covered call, and you can even see the volume's not the best here. But if you go to a 30 delta, it's like 12, a little bit less than that. It's like $6 grand to put on. So that's what I mean. You know, 1,600 bucks for $6 grand. It's a little high and outside of my area for a cover call, but I like that as well. You get decent dividends. Now, looking here, I would like to sell, like I said, the 100 puts. There's no volume. Spreads are 25 cents wide, so this is one where I would set it for like $1, whatever you're comfortable with. I would start probably with $1.40 and see if I got price improved there. But I'm cool with $1.30 as well, because it's only $1 grand to put on. I just don't like paying on the bid, so I would try $1.40 but not chase it. There is a little bit of open interest there. You might even be able to get to the 99s, okay, and see. But I would mess around with these ones here. 90 pop when you're naked, 140 bucks for $1 grand. It's not too bad. And then the put spread, if you can get the fill again, be the 115, 110s. Oops, that came in a little bit. See what I mean? So spreads are wide, 60 cents on that one. I'm gonna take EOG off. I don't like it. There's another energy stock. I'm just gonna take it off. I don't like the defined one. It's not that liquid. Take that one off. Forget I said anything about it. Alright. I create a bigger list. GM just dying here. Dropping like a rock, following this 8 EMA. Yesterday would have been a little bit better of a day for an entry, but I still do like this one. So good light squeeze. All right, so I want to see this one pretty much just keep breaking down, have this squeeze fire. It's got some run room here all the way down to 23, but you'll have a little bit of support right around 28. So want to sell a 42 call up above the 50 day. and the call spread would be the 39s up above the 21. You got a reasonable amount of resistance here. On GM, July, okay, the defined one, the 39.42s, 2 contracts, 55 cents or better, roughly, and good 77 pop and a whole lot of short delta, okay, and less than 500 bucks at risk. The undefined one is going to be just the 42s. The 3 contract minimum here, you get 45 short deltas at like 40 cents or better, which you put at the bid, but also has a great pop of 86%, and it's just over $1,000 for 120 bucks. I like it. Okay, $2 past expected move. All right, let's see how this. FCX kind of consolidating here now after this drop from its all-time high as well. So I want to just see it continue to go sideways. There's a decent amount of resistance here for it to reject, as well as support and possibly continue going sideways. So I would like to sell a 45 call up there above the 50-day, up above 1, 2, 3, 4, 5 levels of resistance, and then selling those 30 puts down here past 2 levels of support, and you actually line up with the next level of support down here at 30. Okay, so where are you? FCX. June 24th, not the most liquid. Spreads are a little wide for this size of a stock, but if you can get it, I like it, right? So I would call it even on the bid at 60 cents, but I would probably try 65 cents first or better. 2 contracts will give you 130 bucks for less than 750. You're going to be $3 past expected move on one direction and 5 the other direction, giving you an 80% probability and leading you pretty much neutral, slightly long. So even if it does run up, you'll be okay. This time a soybean iron condor here. Soybeans have made that high, and they've really just kind of consolidated very, very slowly. You see them trending up, but not really retesting those highs, kind of making just redoing it here, redoing it. But looking at selling the 1820, no, I'm sorry, 1810 call spread, 60, 70 points above the all-time high on this contract, and then selling the 1560 put spread. So you got right at support covered here, and you're going to be past that all-time high. Just looking for it to continue trending sideways a little bit longer. When you go to June 24th, which is 31 days, it's going to be those 1560 40s. At about 50 bucks past the expected move. All right, and then the 1810 1830s, roughly 50 bucks past expected move. Let's come down a little bit. So 2.5 plus or minus, which is going to give you 125 bucks for 365 in buying power and cap you at an $800 loss and a nice 80 pop. Like, that's really good for the iron condor. Okay. Couple of downside plays here now. Going to be Lowe's. Now Lowe's is already down 1.5%. So we'll see. Lowe's has been strong to the downside here, following that ADMA. Good strong momentum. Still has a light squeeze to go. So I'm looking for this squeeze to fire short, break support of that close to 180 level, and then it's got some run room down here to 150s. So looking at Lowe's, July, 4 cents. Spreads are wide, so you might get it. I'll leave it at 4 cents for now. Looking at the 200 210s, right? That's going to put it right at the resistance level, pretty close to that 50 day. So you got a little bit of wiggle room on this one. If you can get it for $2 or better here, right at expected move, 76 pop, and you get pretty close to 12 short deltas. Okay. The other one to the downside is going to be Fedex. This one actually recovered a little bit. Okay. Let me think about this. Okay. So Fedex to the downside, a little bit more choppier than I'd like to see, unlike Lowe's, which is a nice clean run. But you can see that upward momentum is gone, and it's now, still building that medium squeeze. I want to see this fire short, so I'd like it to reject the EMA, retrace back down to that 192 area prior to earnings, which is the end of next month. So there's time here. The 220 call spread almost gets you at this level of resistance here. I don't know what pop that was, but you will be above the 50 days, so you got a lot of wiggle room on this. Fedex, July, 210, 230s. I'm gonna call it, because spreads are a little wide, just call it like 230 or better on this one. Okay, 74 pop, 10 short deltas, and again, it's less than 775 in risk. You'll be right at that expected move. The one to the downside is Texas Instruments. This one still looks okay. I actually might take Fedex off because I'm gonna take Fedex off because these other ones look a little bit better now. So Fedex coming off. All right, Texas Instruments here. Little choppy as well, as you can see, but I like this one to the downside. Still in a good strong trend. That medium squeeze is now gaining the momentum back to the downside here. So what I want to see is this squeeze fire, not necessarily retest the earnings low. Technically, it's got that run room right around 163 down to 160 and then below. So looking for this one to fire short. 180 call spread is going to give you well above the 50 days. So you got a lot of wiggle room on this one. PXN, July 15th, those 180, 185s. Call it $1.10 or better, just because these spreads can be a little wide, a little illiquid, but a good 75 pop and some nice short delta there. I think I might actually take this one too. All right, next one, Xlu Utilities are pushing back up. Got a nice medium squeeze. We held this consolidation range after making an all-time high, and now I'm looking for this squeeze to fire long and break out and start pushing back up. So looking at a put spread right at support, you can see a good support level here at the 70s. So looking on this one, July, the 70.67 put spread, $3 wide. It's, you know, not quite 90 cents, but I like the chart. I like the play. So, you know, 60 cents, 120 bucks, $408 max loss. So less than $500. So you get a good almost 70% probability. But it's currently at 59. I would really try to get it at 60 cents on that one. Okay. All right. SLB for potentially a covered call here. Looking at this. Okay, 45s. So it's got ex-dividend date coming up soon. So looking at this squeeze to fire long, you can see it's a little choppy, kind of really consolidated after making that all-time high, but the moving averages are now stacked and starting to, you know, spread apart as the momentum gets going on this one. So I'm looking for it to break out. So I want to see this one take off. So June weekly, there is a little bit of liquidity on this one specific contract. So obviously buy 100 shares and then sell the 45 call. 41.25, 41.30 plus or minus, right? Gonna be just over 50%. And your max profit here is about 370 bucks for just shy of $2,000 in buying power. So that's actually not too bad. Okay, and like I said, it's got a dividend coming, so you'll have that to help out if you hold it long enough. And then let's see what's next. Coke is another one. Coke got beat up. I actually missed the run, so I'm questioning this one. Coke got killed here, but the last 3 days it has started to run up. That upward momentum is coming back. This is another one with an ex-dividend date coming up soon, so could be a way to potentially snag some dividends while riding it out back to these highs. Now I like this one, the covered call, just at the 65s. Got some run room there. So on this guy, where are you? Coke, try the June again. There's more volume here. If you're okay with that, then that's fine. 66s, but I would probably try the 36 first. So 100 shares, go to June 24, 31 days, sell the 65 calls, 62.50 plus or minus a little bit here. Okay, and again, 240 bucks max profit, $3,000 to put up, little bit high, but I do like the chart. I like Coke back long to retest those highs. You can come here to the 66s. You'll raise your buying power a little bit, but you'll also raise your max profit potentially more. All right, and then the last one is going to be a poor man's version of a covered call, and that's J and J. If you, oh no, this date was missed. That was yesterday. So poor man's covered call on J and J. Got that nice run up. It pulled back. It consolidated. We have a medium squeeze. Looking to see this one retest. So on J and J, it'll be June 24th if you can get this to fill. Selling those 185 calls on June 24th, and then coming over here to January and buying those 175 calls. 13, 25, 35 plus or minus. Okay, and I'd just be looking for reasonable profit here that you're happy with. I can't give you the max profits because it is two different strikes, two different expiration dates. Hold on, there. All right, excuse me. Okay, all right. So, and then that's the list, you guys. Let's take a look at what we have for earnings, and which I don't think is much. I think we're pretty much done this week. I think there was like Nvidia or something like that. So let's take a quick look, and if I don't like them or anything like that, we'll go ahead and I'll just take a regular. So there's that. Let me send that email here. Computer, let's go. All right. So for earnings, we don't really have anything, but let's see. Today is not Friday. Today is Tuesday. Aftermarket. I'm not touching. I'll look at it, but retail's just been getting killed. Yeah, Nordstrom's. Intuit is not the most liquid. Don't think. Man, look at this run up. Toll Brothers doesn't have a lot. Let's see. You can't. Maybe we'll take a look at it. That's not gonna be liquid. Maybe we'll take a look at that one too. Urban Outfitters, it's retail. I don't really want to touch it. Okay. All right, and then tomorrow morning, is that when Nvidia is? Come on. Earnings are not loading. There it goes. Dick's Sporting Goods. Yeah, no, I don't want to touch that one either. That's it. It must be tomorrow's Nvidia after hours. Yeah, that's it. Yeah, Nvidia and Snow are tomorrow after. Okay, so let's take a look here and just see. So we got Nordstrom's. Come on. JW. All right. They have 50-50, maybe slightly leaning to the downside. 27. Yeah, I'm not touching this. The last two, 27.7, 24.7, 12.5, the one before that. And then finally 10.8, but that was like 4 years ago. Huge mover on this one, so that'll be a no, even probably at 50%. $20 stock, yeah, that's too hard to do anything there. You're talking tens, they don't even have it. Like I wouldn't even touch this. What's 12 and a half? 12 and a half is only 38%, so that would be the 28s. Sure, it's cheap enough, you could do it. I don't like it. You don't get very far, and like I said, 20+% moves over the last two times is a little much for me. So I'm gonna pass, especially the way retail has been. Okay, into it. Let's see. I get kind of mainly gaps up a little bit. Also not the most liquid though, with moves of 13.8. That's pretty good. After that, 6.1. So just a fluke there. Then at 6.1, 5.3. So one fluke on that one. You're probably gonna have defined with like 360. 20% right now would be 290s. 436. If you have the buying power, that's reasonable credit where you can get 20%. I'd probably go a little bit further out. I'd probably try to go a tad more here, but I mean it's still really good, like 280, 440 if you have the buying power. Spreads are wide though, so I don't really like that. Find risk, be a little too hard. Yeah, you might be able to get an iron Condor on it. Very, very close to being 20%. 435s. That's 20% to the upside. 290s. So that might fill too at a buck. Yeah, see? So 20% iron Condor I would consider. But we'll take a look at this one after hours. Not after hours, it'll be during power hour. Alright, let's see. Toll Brothers. Alright. Most liquid here. You got moves of 3.2, 4.9, 6.2, 10% 4 years ago, then 7.1% 4 years ago, 6.2. So it's a small mover. But let's see, it's also a $45 stock. 20% would be 36s, so 35, 54s. Okay, 75 cents. All right, it's doable with a 20% strangle if you can get a fill, because that's 20 cents wide there, not a lot of volume. Cents wide, so maybe right with a strangle. $100. All right, let's see. A, and look at this run up. Very nice, coming back up to high day. Okay, A, hit or miss on the nice daily, nice chart though. That's why it's running. It's been running before I got on. Like, not me. I wish I had that effect. All right, let's see. 4.2, 2.3, so that's not bad. 6%, 9.7, 11.4 further out, 9.7 also further out, and then after that, really a 6%er. So it's not a bad mover as well, but let's see, it's a $125 stock, so you're talking 100s, a little bit of volume there, 151s, close enough, no, nothing there. That's ugly. I don't like it. Just because you can't even get it. Pass. Alright. And the last two are retail, so I'm not even going to trade them, but I'll take a look for you earnings people. Urban Outfitters. It's going to be like Amber, you're going to get killed. But let's see. 14, 12, 14.8. Jeez. So it can, oh, there's a 20.2er in there too. So, ooh. This is a 1875 with a 20%er. You're going to talk 40% at least. There's going to be the 11 and a quarter, so you can't even get them. So 13s is what? $30.75. So you only get 30% coverage, and then 24.5. So yeah, there's another one just like Nordstrom's, but you're getting about 30.75% angle, and that's not enough, especially if it moves 20% like it did. So I would probably pass here. Wow. And then the other one is what? Dix is, there's a couple of big ones too. 14.3, 10.5, 14.8, 10.7, 11.4s, 23.3, but that was closer to 4 years ago. So there's another one. Close ranges 10 to 15%. So I don't really like that. 71.80. 30% would be 50 and a quarter. So there's 50. 93.3. Fives. Okay. not bad. So we'll just call it a 30%, but I'm staying away from it as well. Okay. So I'm going to pass on this. Okay. So the ones I actually like, if you can get a fill here, is going to be Intuit. All right, right now it's showing about $1 on a 20% iron Condor. We don't usually see that. And again, the biggest moves was like 13% one time. Everything else was well under that. So under 6%, that matters. So I'm okay with that. Well, I may do that here during power hour, but I'm not going to chase it. You can see, look at this. This is 80 cents wide, 80 cents wide, 55 cents wide, 55. So these spreads are super wide. It's not the most liquid. Like, I won't chase it. I'll hit it at $1 probably earlier than normal and just see if it fills. Okay. And that, no earnings plays for me. So let's take a look, see which one of these plays I will take today. All right, gonna need take that play if it fills. That's all right. Let's see what we got going here. What do I want to take? Kind of like the idea of short delta still, but I do like that put. Let's see. Since we got rid of LVS already, I need more short PLF. Okay, this undefined one was 30s. Good, and then the 28. Good. Lanes. Yukon. 42. Either 76 pop versus about this. Oh, Texas Instruments, I think, was the pick. That was pretty good pick. Pretty good. I wish I can get it $1 here though. 4 pop. A lot of runners. Yeah. I do that one. See what Lowe's is. Texas. All right, I'm gonna go with Texas Instruments here. I'm gonna try mid price first. Nothing. All right. I'm gonna down 2 pennies. And I got filled at 122. So, all right. Okay. Entry. This is a TXN vertical call spread. This was July 15th expiration. So I'll do 180 calls and buy 85 calls. Okay. Credit of $1.22. Alright, there's that. Let me quickly send that email out. Be good to go here. Be nice if we can get another day hold on this. We won't. This naked one maybe. Come on. Or not. Okay, 74. Place. All right. So let's take a look here where we are. Nice here with LVS, you guys. That was a great overnight hold. Got just over 30% on that one too. 37%. So that one played out perfect. Good job on that one, you guys. Halliburton filled right at market open because I left that order in, which is fine because I believe Halliburton's doing okay. Slightly down today. That's fine. So, and of course got filled on Texas Instruments. MasterCard's doing what it should, hanging out right there at 8%. We're actually dead center here in it, so we're perfect right where we want to be. Okay, AT&T, Halliburton, like I said, is fine. Looking to hold this a couple more days, and then probably Friday we'll roll it out. I don't know if I want to go to a weekly or if we'll go to July. We only have now a locked in, where'd it go? Currently a locked in loss of $33 per contract. So right now, if it expires out of the money, I'll lose 66 bucks, which isn't too bad. But I want to see if I can't chip that away even better. So we'll just see as long as we can stay far enough out of the expected move since it is naked. AT&T is fine. Okay, it's almost at the 50% of max profit. I'm halfway considering leaving it on and just rolling it and collecting dividends and lowering the cost basis until I need to have this capital, right? If I need the capital and I'm above 50% or above my max profit, maybe I'll take it off. But for right now, I think I'm just going to leave it alone and let it keep going. Okay, for now anyways. Could change. That SPX roll did not go through, obviously, with us being down $56 now. So I'll keep watching this, but this is the one that expires in 7 days. So I don't really want to go to 10 cents. I might because I do have 305 in credit, but I'm trying to avoid rolling for too many debits if at all possible. Okay, BMY pretty much still flat. This chart still looks great too. Still in that high squeeze. It's just consolidating. We need a good pop on it and we'll be good to go. So we still got 24 days left, so not going to worry too much about that one. And Texas, obviously we just got in it, so what I'm going to do is I'm going to set this at my 30%. 7 days or better, or 7 days or less. The next Tuesday. Alright, and that one's good to go. And then silver's green on the day, slightly down 25 bucks. Not too bad. Oh no, hey, I like it, gang. Alright. We are good. Okay. Alrighty, guys. Well, hey, not too bad. Not too bad. Let's see if this can hold and continue the push back up. Maybe we can actually finish the day green and break the curse of every gap up ends with a red day. So let's find out and see what happens. All right. I'll see you guys for Power Hour. Like I said, I'm planning on bidding on into it for earnings, but we'll double check and see where everything else is at again during that time frame. All right. We'll go from there. Good job, everybody, with LVS. See you guys in a couple hours. Let me know if you need anything.